Welcome to In the Hot Seat with the Tenney Group. I'm Spencer Tenney. It's good to be with you. Today, I'm very excited to have Frank Iannelli from Whitley, Penn. Frank, welcome to the Hot Seat.
Spencer, great to see you. Thanks for having me on board.
Well, before we heat things up, sir, why don't we just take 20 to 30 seconds, tell us a little bit about Whitley, Penn and your role there at the firm.
Sure. Yeah, Whitley Penn is a full-service CPA firm. We have offices in throughout Texas, Fort Worth, Dallas, Plano, Houston, Austin, and Midland, and Odessa, with a small shop in Hobbs, New Mexico. So we provide all the traditional accounting services, audit and tax, and then we have other segmented groups, valuation, transaction services, risk advisory, litigation, wealth, several others, and I head up our strategic consulting service group.
Well, thank you for that overview. So let's jump right in here. So in addition to do that, I think it's kind of relevant for our audience here that you've also in a former life did some interim CFO work for some trucking companies. So I think you have a very unique lens into a great deal of our audience here. And so let's talk about that from profitability. Like how are you helping folks from a consulting standpoint achieve greater profitability right now?
Sure. So our mandate in our consulting services group is really to help companies improve profitability in a meaningful way where we could actually change their lives. And so we do that taking a really holistic approach, looking at all areas of the business. It starts, with accounting and the numbers, and make sure that they're done properly, presented properly. And then we're looking at everything from, as it relates to trucking companies, utilization is a big key. Right? Are you getting the maximum use of your equipment? But then we're also looking at how you're financing your trucks and trailers, how you're servicing the repairs and maintenance. But then broader, we're looking at insurance, we're looking at taxes, we're looking at a lot of different things that go into that. And really try to help establish a culture and a framework to get the management team aligned to focus on 3 or 5 key initiatives that could really move the needle. So alignment, it's big for us. But more recently, we found a couple areas that have really heated things up, and it relates to COVID, the CARES Act, and the employee retention credit.
So you knew that we were going to go there, and I need to unpack this a little bit because I've been watching the interwebs blow up, so I know this is a big deal, but there's also a huge amount of people that don't understand this or how it might benefit them in the trucking logistics space. So let's talk about what is the employee retention credit and what does it mean for trucking logistics companies right now?
Sure. So the employee retention credit, ERC we'll call it, actually came out in 2020 along with the CARES Act, the COVID relief package. The CARES Act had the PPP program, payroll protection plan, which just about everybody knows about and participated. But alongside that came the employee retention credit. When it was introduced in 2020, it was very restrictive, meaning that you had to choose between the PPP or the ERC. And 99.9% of the time, PPP was going to be better. So the ERC was ignored, rightfully so. It didn't benefit companies. It didn't do what it intended to be. So it just sat there, kind of went away. But then last January 2021, the rules changed on the ERC, where it became very attractive to companies, of all companies, but trucking participates as well. And the big change to the rule was, you can now have both the PPP and the ERC at the same time. And so with that, it opened it up for all companies, and there are a couple of rules to qualify we'll go into. 95% of the companies that we've talked to have not heard about it. They may have heard about the ERC from years ago, but they've ignored it. And one of the reasons is the PPP was promoted by the bankers. You had to go through a bank and a portal and so forth. The ERC there's no bank involved, so there's really not an advocate for it. And so there's now some recent literature coming out on it. There was an article on the Wall Street Journal. There's getting more and more attention, but it's been ignored up to late.
Let's talk about the economics of this and what this potentially means. We were talking about some of these stats that are, I mean, they're pretty staggering as far as the money that's being. It's found money basically for people that didn't expect it, weren't planning on it, and now they're experiencing it. So, let's just take a typical mid-sized trucking company. What are you seeing in terms of what they're able to experience as a result of this available employee retention credit?
Sure. So 2021, it's where it's most attractive. So we'll use that, and then we'll go into 2020. For 2021, if you qualify, then you're eligible up to $7,000 per employee per quarter. And so the program runs through the third quarter of 21. So there's 3 quarters. So it'd be $7,000 per employee, or $21,000 for the 3 quarters. So if you have 100 employees, and they're W-2 employees, drivers, admin, dispatch, maintenance, whatever those, as long as they're earning a W-2 salary, and it could be part-time and or salary. So let's assume you have 100 employees in your trucking organization, and you qualify. It would be $700,000 for the first quarter, $700,000 for the second quarter, $700,000 for the third quarter. And Spencer, you went to UT as well, so that's $2.1 million. And the beauty in it is not a loan. There is no forgiveness. It's a grant. The IRS will actually write you a check for that amount. And the way to get this is through a payroll tax, your 941. You end up amending that and sending to the IRS. So there's some rules if you had PPP where it may offset that, but if there wasn't, it'd be 2.1 million. And then for 2020, the rules are a little different. It's $5,000 per employee for the whole year. So the maximum that one would get would be 21,000 in 21 and 5,000 in 20. So 26,000 per employee.
I mean, that's remarkable. And I'm thinking about so how do you see the folks that have done this within our industry? What are they using in terms of are they using that as a reserve? Are they using that for acquisition capital? What do you see people doing as part of once they receive it? What are they how are they using it? How are they purposing it? That's that new capital.
So part of any government program, it doesn't do exactly what it's intended to do. So 2 things with the program. Employee retention credit is a bad name. It has really nothing to do with retaining employees, as long as you have employees, right? So that gets a lot. But the second is it was meant to get money to companies very quickly. But the way they did this, it's a manual process where you actually mail in an amended 941, and it sits somewhere. And we're seeing 8 to 10 months before you actually get a physical check from the IRS on electronic. So companies are starting to get the money in from last year, but in the next couple, 3 months, there will be billions hitting the industry. So the ones that have got it and the ones we've talked to are using for a number of different things. One, to reward employees. They may put in a 401k plan, raises, so forth. Others may be paying off debt. Others are using it to grow, right? So either acquiring other companies or acquiring equipment, trucks and trailers, to take advantage of that. Reserves as well. They know they're going into a period today with high fuel prices that they're not necessarily able to pass along immediately to customers. So that's offsetting some of the impact of lost profits. So there's a menu of options to do, but the ones that we've talked to didn't know 5 minutes prior to my conversation that they may be getting $2 million. So they're ecstatic, and then we have that conversation a little later. But we'll see a lot of M&A activity as a result of that, as well as expansion.
Well, yeah, I mean, I think you weren't planning on it. You just kind of de-risked the whole possibility because you weren't. I mean, you never considered that as part of your overall business strategy, having that available to you. So I can see how it could open up a lot of doors. So you mentioned that 95% when at the beginning of the conversation were not aware of it. What percent actually qualify that you talk to that this is available to them?
Yeah, I would say over 90%. Yeah, and for all reasons, and we'll go into the qualifications in a second, but uh, a lot of companies said, well, we won't qualify, and we said fill out our intake form, and surprising, there are a lot of other rules involved, and they qualify, so it's worth taking the time. But for trucking, especially if you're in the energy oil field service, so if you're hauling sand, water, chemicals, crude, anything related to all the service, the qualifications are you're comparing, it's a revenue decline you're looking for, but you're comparing your base period is 2019 and you're comparing to the same quarters in 2021. So think of pre and post COVID. 2019 was a good year for a lot of companies, especially in the energy sector. And then even without COVID, prices started to fall. You had negative oil price, so forth. So we know they're going to qualify, and they have a lot of employees because for every truck, you may have 3 drivers. So it adds up pretty quickly.
We've experienced this, and just like you said, it's a physical check. It landed on my desk, and I was like, okay, I guess this is real. This is
No, it
it's
is
real money.
real.
It's like it's
It's
like
definitely
I
real.
was suspicious, but yeah, this is real. So I think that's fascinating. So let's talk about like that process. Like I said, we're qualified. Walk us through in terms of what's next, what's the timetable in terms of you know the app, the qualification, and then actually getting the check in hand.
Yeah. So the program ran through the third quarter of 2021. Initially, was planning going through the fourth quarter, but when that infrastructure bill was passed last year, they ended it prematurely. So it goes through September of 2021, and to qualify, you're looking at an employee headcount and a revenue reduction. So just like PPP, you have to have less than 500 employees in 2019, full-time equivalent employees. So that's one check. And then you're looking for a revenue decline. So the easiest way is you're comparing first quarter 2021 to first quarter 2019. And if you had a 20% or more revenue reduction, you qualify for that quarter. And you do the same for second quarter 21 compared to second quarter 19, third quarter. So you qualify for each quarter individually. And you're looking at revenue, not profits. So you could have a trucking company that, for strategic reasons, decided to shut down one of their divisions and/or locations. They still qualify. So it doesn't really have anything to do with COVID. It's just if you had a revenue decrease. So once you hit the employee headcount reduction and the revenue decline, then you qualify for that. Uh, if you had PPP two, which typically took place in the first quarter of 21, you can't use the same wages that you use for PPP forgiveness for the ERC. It only means that it may reduce it a little bit or separate depending on when it hits, but you can still get them both. So you go through the process of calculating the credits, filling it out. Uh, you get the credit by amending your payroll report, which is called a 941. So the amendment is a 941X. You mail it in, and then you wait. Really, you wait 8 to 10 months. Hopefully, they'll throw more resources at it. It'll get done quicker. But as this gets more popular, I tell people file as quickly as possible because it could take longer. Uh, and then you actually get a physical check sent to your location. The one difference between this and PPP, well, 2 differences. One is there's no forgiveness; it's a grant, so it's yours. But the ERC is taxable, where the PPP was not. So you will pay taxes on that. And the way you do that, it's really considered a reduction of payroll, which increases your taxable income.
Well, either way, it's taxed on found money, so I don't think you're going to get a lot of little pushback on that at all. It's just
And so, from a timing perspective, a lot of people say, well, the program ended in September. It's too late. But the reality is, just like any other tax return, you have 2 to 3 years to go back and amend that quarterly payroll report. So you have another 2 3 years to do it.
I think that's really interesting. So what about the folks that maybe, like many of our clients, maybe they exited, they sold their business in 2021 at some point? How does this affect their access to, the ERC?
So as long as you were in business for the quarter that you were qualifying for, so let's just say first quarter of 21, you exited in the second quarter, you're still eligible for the first quarter. Now, depending on how you sold your business, if it was an asset sale, then you still maintain your EIN number, which is what you're using in your payroll report. If it's a stock sale, that probably went with the new buyer, and then he'll claim it. So we're seeing situations that a company was acquired, and now they're going to go get a couple $1,000,000. We've seen others where a private equity group acquired a company for, one was $50 million, and we were able to get them a $5 million ERC, 10% of the cost. So there's a lot of strategic place to look at this. And then you have others where companies were looking to sell their business, but it's not worth what they thought it would be worth, or it was, but they really want to exit. This ERC helps bridge the gap to get the valuation that they may have been looking for.
I think it's a tremendous tool, like you said, just to help bridge gaps, solve problems. If it's there, it's just something that we can use to help address these respective goals of each party. I think it's a wonderful instrument. So one last question, a little bit of a wild card. I would love for you just to kind of talk about the way that you do business. You've had an influence on our culture. I know you're a big Bob Buford, not Bob Buford. Well, I guess it is Go Giver. Yeah, and so there was one story I really that really impacted me. I think it was when you were doing an interim CFO role for a trucking. You had a lot of centers of influence, and hey, they're selling you. They're trying to sell their products, and you said, hey, if you want my business, go help me, go do something for me, and then you can earn my business. Tell that story for our group, because I think that's something that's so valuable, especially for all the sales and business development people within our network here.
Yeah, so it was probably about 8 years ago. I was this interim CFO for a sand trucking company, and it was my first couple weeks. I was trying to figure out what's going on. I had not been in that industry before, and a banker called me. Well, several bankers called. So whenever you get into a new position, all your friends come out and call you and say, hey, I want your business. And so one had called, so I take the calls, and he was telling me how much expertise they had in the oilfield service space with, Halliburton and Schlumberger, and he just went through a list of names. And I said, great, those are all on our target list for customers, and you have such a great relationship. So if you can make an introduction to our sales team to that, that's a great way to add value outside of your banking expertise, and we definitely, you'll be right on top of the list. And he did, and he got the business. So from that on I personally always look at how can you add significant value to a company, even outside of what you were hired to do, intended to do. And I did that based on a book that I read years ago called The Go Giver by Bob Berg and John David Mann. And it really talks about how to add value to your clients, to your employees, how to set a culture of delivering more value than you receive in compensation. And therefore you become that trusted advisor. And so it's a book that's really stayed with me for all those years, and give to all my employees and clients and so forth. And it tells them the philosophy of how I do business, because many times people say, what do you do? And I say, well, rather than ask that question, let me tell you how I do it. What's my philosophy?
Right. No, I love that. And like I said, that's something that has stayed with me, stayed with our team for a good bit. And I hope that blesses people that are watching right now. Frank, that's going to do it for us today. Thank you so much for taking a little heat this afternoon with us. That's going to do it for us here in the hot seat. We will see you next time.